Hey, what's up, everyone? Welcome back to another episode of Stock Market Review with Luwep Trading. Coach Lord is here, and we're about to get straight into it, guys. Right from the get-go, what a day it was. Again, that was expected when those that ceasefire was announced, and whatnot. That was expected. So the Dow actually went up about 13 hundred prints or more. What a surge that was. That was the best single day in the Dow since 2025. I think April 2025. So this is not the kind of thing you typically see. The S&P also popped more than 2.5%, and I believe the Nasdaq also popped more than 2.8%. On the other side, if you held on to oil, you got bloody today. You got absolutely blooded if you held on to your oil plays because oil dropped about 17%. At some point, it was as low as 20% at some point, and that's when I actually strike. It dropped 20%, which was a support level, and I actually went in and I bought some calls trying to write that up, which it did. I played Chevron because like I told you guys, I do not play crude oil futures, so I bought Chevron, and that rallied up about 6 points, which gave me a good little cushion. At the same time, sometimes you just have to know when you have those pop, those ridiculous pop, you know there's typically going to be profit taken very early in the morning, and that will give you an opportunity to go short if you are not already in long. You have an opportunity to go short, and that's one way to benefit from that. Now, if you saw the thumbnail, you will see that exactly what that thumbnail says. This is what a relief rally looks like. This is exactly what it looks like. When you have a bit of a relief rally, the stock market, whichever direction is going, never goes all at once. So we had this pop, right? It's a ceasefire, so there's a good pop. Now you start having all of the information trickling down, right? So the ceasefire happened, which is good. It's great for oil. So oil dropped. We're going to have a supply coming onto the market, except the Iranians just clarified because that's their stance. Again, I'm just relaying information to you guys. This is not about one side or the other, but what they said is they feel like this is sort of a ruse being used by the U.S. To get oil back onto the market because they didn't want economies crashing. So what they are actually doing, they only going to let about 10 to 12 ships go through within the next 2 weeks. So today, I believe only two tankers got through today, and those tankers they are prioritizing tankers going to their allies or people that are neutral, say like Pakistan, India, China. Um, they included France and Spain in that in that list, and Brazil if Brazil need anything. So these are the and South Africa, South Africa. These are the countries that they have said they don't have a problem with things going through. So we are monitoring this, see how things are going to go. And right now there seems to be some jockeying for positions. Um, this seems to be breaking down already, guys. It's unfortunate. I'm just glad we are past the whole civilization going to die comment. I'm glad we are past that, but we are not out of the woods yet. This is not an end to the war. This is a ceasefire. Again, I want you guys to understand that, meaning somebody can break it. Somebody can break it, and we can be right back where we started, with missiles flying all over the place, and innocent people dying, and the world economy suffering once again. All right. Um, other things we had again today. So we had an FOMC meeting today, and those guys came out and they are talking about stagflation, which I talked about to you guys yesterday. So that was something that was predictable. They talking about stagflation. They did mention they still would like to cut interest rate, but as of right now, excuse me, they just don't see how it is possible to cut interest rate at the May meeting unless things change. because they do see this geopolitical issue in the Middle East as being inflationary, and we all know it, right? So that happens. Gas prices going to go higher, which that will bleed into everything else. All right, guys. So now it's time to actually go in the stock market and see exactly how things are going. Here we go. By the way, for those of you guys who are here, I appreciate you guys being here as usual. Empire Path and James, I see you guys. I do appreciate it. Excuse me. And if you are here, make sure to give me a like, give me a thumbs up, because those engagement really help the channel. That's the only help that I ask you guys for. Really, that really it's really warms my heart when I see you guys are participating, whether it's asking questions, sharing the live, and making sure you're helping me grow this the channel. I really appreciate that. Now I want to go on the SPX with you guys, so you guys can see exactly what happens. What was it yesterday? Yesterday I talked to you guys and I said, hey, I can see the move up. I can see us going to this line. This was our primary line, which was here, and this was our secondary line, right? So this is what I put here for you guys. Primary and secondary. It seems like we went right to the secondary line. Again, that's the resistance level. Now, what there's a couple of things that surprised me with this. First thing first is how we went right to resistance level. So we got stuck at resistance level, and that did what? That gave us a huge gap. Every gap in the market eventually gets filled. Now, is it going to fill right now? I don't know. All right. I do not know if it's going to get filled right now. But the only thing I can tell you guys, when we got up there this morning, I showed it. I went short. I went short. I already took some profit, and I'm holding some more. That's what I did. I went short on the S&P 500 once I see we got to here, because gaps always get filled. Now it is highly possible we may push up, right, a little higher. Things like that happen. But guess what? One thing I keep telling you guys every single time. Some of the biggest jump you will see in the market, the crazy gap up to hitting like circuit breaker or things like that, that kind of things typically happens when the market is going down. It's a relief rally. It's what they call a dead cat bounce. Is that what that is? I don't know, but do I see that as being a low risk, high reward trade for now? Yes, I do. And that's precisely why I went in. This is a low risk, high reward trade, because if I am correct that we are about to drop, this is resistance level, and we cannot take the resistance level, and we are going to drop. Guess what's about to happen, guys? This is what's going to happen. We have some space between all this area. If I take it to go up, I don't know if it can go up. Now, if it had closed above the right above this line, right, right above the resistance zone, I would have taken it to go up, because I would say, hey, you know what, we have space to go up there. But as of right now, again, we are hitting our primary trend line, which I gave you guys yesterday. That's the primary. So there was no secret. As soon as we opened here, we pushed here, we got to there, I showed it, right? I gave you guys the level. If you when you have a chance, if you don't believe me, guys, go back and watch the live yesterday. You'll see when I draw these exact lines for you guys, and I was showing you guys, hey, this is what I'm looking at. This is what I'm seeing. So that's what you need to pay attention to. All right. So I just wanted to show you guys on the SPX, because we did go over that. I just wanted to quickly take a look at that. Now let's swing over to the SPY and see what the SPY is doing. All right. So this trend line is no longer valid. I believe that's my 4-hour trend line. That's no longer valid. This is what we are doing right there. I mean, can we squeeze up from that? It's possible. It is possible, because we try to get rejected, and we still moved up, but we still have a lot of resistance all throughout this area. We have a lot of resistance all throughout here. Now let's go in the 4 hour time frame and see how we're looking in the 4 hours. The 4 hours as of right now seems like he's doing a bit of a. This is the SPY, by the way, still the S&P 500. That's the SPY. It seems like he's doing. You can say he's doing a bit of a bull flag, but at the same time, that bull flag is happening right at resistance level, while all throughout the day we have all those geopolitical issues being very very shaky. It's a very shaky ceasefire to the point where at some point, I don't know if it's still closed, but at some point today, Iran literally announced that they have closed the Strait of Hormuz once again after only two oil tankers actually passed through. That was closed. So these are things that we have to keep in mind, even when we're looking at, possible move up and all this kind of stuff. We have to keep to pay attention to these things, and we have to see them exactly for what they are. All right. So anyway, we had this rallied up. Let me push this up. So now the MACD is actually positive and we're rallying up, but again, we are at resistance levels. All right. Let's go in the 2 hour time frame. Let's see how we fare in the 2 hour time frame. I mean, that's a higher high. So again, we are still looking good. Again, we're gonna repeat that. I'm gonna keep repeating that to you guys. We are still at resistance, right? We are at resistance and we are losing momentum, and it seems like we might lose the ceasefire. And if we do, as fast as we went up, we might go down just as fast. All right, and again, we have inflation data dropping, I believe on Thursday. That's going to be interesting. All right, um, let's take the 30 minutes out. Now, this is the one part that worries me a little bit because the 30 minutes already give a what? You guys should be able to see that it is very clear. It is very clear. Again, we talked about that the other day here. It is very, very clear right here. You guys can see we have a head and shoulder pattern that was formed, and then we drop. Let me just just like that. There you go. Head and shoulder, and then we drop. As of right now, this seems like maybe might be making an inverted head and shoulder pattern. Maybe, but this is the part we cannot ignore. We can also be doing a double top to continue down. So this is the two possibilities you have. Now, if that's going to be an inverted head and shoulder pattern, this is your neckline. All right, that's your level. Six. I'm gonna give you guys the number tomorrow for those of you guys who goes intraday. 676.79. If you trade intraday, this is a key area you need to be looking at. If we break above, when we get there, we're going to get a reaction. We either going to break above it, retest, and keep climbing, or that's if we go there, we're going to test it, get rejected, and push down. That's what may happen. All right. Or on the way down, if it is in fact a double top that's in play, you can be sure there will be some reaction right at the neckline. Once again, reaction at the neckline, you just want to see something like that and take the next leg down. This is the way you guys need to see it. You can decide. My advice, if you do trade, or let me rephrase. What I'm going to do, since I trade intraday, what I'm going to do, actually, let me do that right now. I'm going to put alerts. I'm not taking any trades in the middle. all all inside of this area, I'm not taking any trades. What I want to see is of a break of that range. Break of that range. It's a resistance zone. So a break out of that resistance zone, all this red area, I need to see a break of that. And then wherever it is, I can try to ride that momentum. Again, remember, for me personally, I know some people like to do that. For me personally, I do not counter trend trade. I trade with the trend. The trend is your friend. This is why I love trend line. The trend is your friend. At some point, it might take you off a little bit. That's when we have when things break the trend line and keep moving up. It happens, but more often than not, your friend the trend is going to be there for you. All right. And if you are here, by the way, again, guys, I appreciate you guys being here. Make sure to give me a thumbs up, like the video, share the video with anybody that you can. I appreciate you guys being here. If you have any questions, feel free to drop them in the chat. I'll be more than happy to answer any questions. I do notice that lately you guys don't ask me any questions. Trust me, I have no problem addressing certain addressing some questions for you guys. All right. So don't be shy, guys. Don't be shy. Let's get to it. Now that's the S&P 500. Now, what am I going to look at? So this is not a pin bar. I had somebody say, "Hey, is this a pin bar?" I said no because this is red. That's not. It's red. You still have a little bit of a wick up there. That is not a pin bar. Um, Now the good news is right toward the close, we were actually tanking and we rallied and pushed and closed right above that line, which was absolutely vital that we closed above that line. So we did, which was great. All right. Um, Now, what I'm going to be looking at tomorrow again, what exactly is your levels? Find your levels. Just draw them out. I already put my stuff in, but these are the big levels. All right. Although I have my alert above and below that range, but these are the key levels. These are key levels. If we lose it on the way down, we're going to drop hard. Why? We don't really have any support down here. You guys can see that we don't have much support down here. All right. Now there's something else I was looking at. Let me see if I can find my channel. So what this really did, see if I can I do not need the fib channel. All right, I can't keep you guys here. Every single time I look for this thing, I always miss it. Is that my channel? No. Oh, there you go. Perfect. This is what I wanted to show you guys. This is so interesting. I want you guys to be able to see that. I want you guys to be able to see it. Um, I have to take that actually even further back. See, that's the thing. Sometimes I have to go on the I have to go way back on the weekly. You know what? This is not looking right. I know a lot of you guys are watching on phones, so that's just not going to look right. But if you do the channel, I can just explain to you that to you guys. If you actually draw a channel, what you're going to see in the SPX, this level here, that support level, one of the reasons I got out, this is literally the middle of that channel. This is the middle of the channel. Every single time, if we ever start going up or going down, once we get to the middle of the channel, we're going to get a bounce. That's typically how that this is like clockwork. It's one of the easiest trade. If you can get a channel, that's something that's going to happen. Let me see. Based on all the news development today, do you think there's a possibility for the week to finish in the green? Since it did not really go down today after the news came out. It depends on a lot of things. Um, so I think it was a strategic time that we picked. We picked to start those talks on Friday because I can guarantee you on Friday before market close, there's probably going to be some leakage from the administration to say the talks are going great. Meanwhile, you most likely might find the Iranians coming out and saying things are not going as rosy. But that's the line they're going to take. That's the line I would take because I'm not going to let this stock market crash because that's the only part of my economy that is still working right now. So hey, you have to do what you have to do. All right, now can we end up green? I mean, we had such a big push up. I can see it. We had such a big push up. I can see it, but I don't see us keep rallying from there. That's the one thing, right? Why am I saying that? Because, like I keep telling you guys, I do not see a change in the story in the macroeconomics. There's no change. Nothing has changed. We don't have more jobs. We don't have companies hiring people. Companies still doing layoffs, right? People still can't get jobs. Groceries, inflation is still rising. Home sales still down. Home prices still down. Interest rates still going up. So we have all these things going on that has not changed. I understand. People has been focused a lot on the war, right? So most people has been focused on the war. So the fact that people are just focusing on the war, it sort of means that you completely forget there's a lot of other things that are not right with the market. Now, whether there was a war or not, we were already about to go down. We were already dropping. All right, that's something that was already happening. And then the war was you can see the war was the final catalyst, but we were already dropping. So I think we just sort of like use the war to make it seem like, hey, that's why the market dropped, but that's not the reason the market dropped. The market dropped because right now you have a lot of companies spending a lot of money on AI for the past 2 years, and most of them are coming out as they are saying, we are not seeing a return on investment yet. So you mean to tell me you've spent billions or millions of dollars? Some companies spend billions on AI, and you guys don't have any return on that investment yet. And for the only way you're going to see the return is maybe like in a year or two. So that means you have to keep spending more on AI. How long can you sustain that? Right? Like how long can you sustain that? That's the big thing. That's the big difference that we have in front of us right now. Now I'm looking at the Qs. The Qs did something interesting. While the SPX still closed somewhat bullish, the Qs did not. And with the Qs, all we did was go right back. And you guys remember how choppy it was in there. You guys can see it. We had this zone right here. This was very very choppy, right in there, and that's literally where we went. We just went right in there right now, and that's where we're sitting. All right. Going in the 4 hour time frame, the 4 hour is not looking very good because every candle is closing lower. Every candle is closing lower. Yes, we may still rise, right? But right now the story is not looking very, very, very good. The chart is still a bit similar to the S&P 500, by the way. Chart is still a bit similar to the S&P 500. Let's go right back to that. I just realized I was not giving you guys the just realized I was not giving you guys the screen. There you go. Right there, you guys can see the charts are very, very similar. You guys can see it. This is what we're doing. 4 hour, 2 hours. There's not much going on. Really, we're losing momentum, and we are dropping. We just keep making lower highs. This is the high. This is a lower high. This is another lower high. Altogether. So we just have to wait and see. All right. Now let's take a look at our good friend the VIX. The VIX, the VIX is interesting. If you look at the VIX, guys, see this again, guys. Why do I tell you guys about trend lines? This is why I love trend lines. I love trend lines. The VIX drop. Guess where it came to find support. It came to find its support right at the trend line. That's the trend line I drew for you guys yesterday. Again, you guys saw me updating that trend line yesterday. This is exactly where the VIX just came. Now, it's making a doji. A doji most of the time signals a reversal. Doji most of the time is a reversal signal, and right now we are making a doji right at the trend line. So we're just gonna have to wait and see how that happens. And again, it dropped 18%. The good thing it was not 20. right? It's not 20. So it was. So that means we only have an 85% chance of a reversal day over the next two trading days. It works both ways. Whether on the way down or on the way up, as long as the VIX gives you like a more than 10% a move up or down. Either way, up or down, 10%. That's what that means. Now let's go in the 4 hour time frame. You guys can see it's hugging it. It's hugging it. Why was I talking to you guys about all this time? We have a what? We have a head and shoulders pattern. I told you guys that hey, there's a possibility of other stuff, but again, this is what the VIX just did. We were below resistance level. Path of least resistance was the way down. So we went down. Now we got to resistance. The trend line, I mean, we got to support. Trend line is support. Path of least resistance with this big ass gap, with this big old gap, path of least resistance is a push up. All right, it could still go down, but until we lose that trend line, we have to assume we're most likely going to have a bounce. All right, going the 2 hour time frame, it just consolidated here all day. And if you guys are looking at this, okay, this seems to have made a bit of a double. That's a double top. Now, can it continue to go down? We shall see. And right now, the MACD is curling and trying to go. It's in negative territory. We'll see by tomorrow if it can climb back into positive territory. All right. So that's the VIX. Let me see. You have any questions? Any additional questions here? No. And again, guys, just a reminder: if you guys are here, thank you for being here. Don't forget to smash the like button. All right. Don't forget to show that love. Show me some love. Um, Now let's go and take a look at oil. Guess what oil is doing? Slowly rising back up again. Slowly rising back up again. Why is it? Why? There's a couple of things that comes into that. A lot of people think oil was going to crash back down to like 50s. I don't think this is something that's going to happen right away. And here's the reason why. One, you have Iran already said they're not going to let that many ships through over the next 2 weeks. All right, that's number one. Number two, um, they just have an increase in cost because that $2 million is still $2 million. Number three, a lot of countries just realized, oh snap, we did not have enough reserve. Or some companies, because Delta was talking about cutting back on, and American Airlines cutting back on some flights because they wanted to start rationing jet fuel, right? So what do you think those companies and countries are going to do? They are going to try to fill up their strategic reserve. Some of them already tapped into that, so they're going to replace it. So that all that means is demand is going to increase or demand is going to remain high, right? So as long as demand is high, I don't foresee like a crash in oil prices. And but do I see the oil going higher right now? I don't know because here's what I'm looking at. You may not be looking at that, but sometimes you have to be able to anticipate what might be coming, right? So this is what I'm looking at. We have to negate that before I can say, hey, we're about to go up. First of all, right now this is a nice evening star. What a crazy candle. Now this is what you can say we're looking at. That's the left shoulder. This is a head. Are we going to come make a right shoulder or are we going to squeeze up? Is that to me being paid per trip? Um, well, so for those tankers that's coming in with goods to sell to the GCC, the Gulf countries, they pay to get in. Now, if you go in there to get your oil on the way out, you have to pay. So if you bring in goods in, you pay. If you bring in out oil, you pay. So that's a nice little change. Oh, my screen's being shared. Oh, actually, no, it's not. It is. It is. It is not. I got it. There you go. This is what I was looking at with oil, right? So this is oil right here. You guys can see right there. it might be forming a head and shoulder pattern. All right, about to form a head and shoulder. You have to be able to spot these things before they happen. This is how you get the. It is an aggressive way of trading, but man, do I love it because the conservative way would be, hey, you know what? This is the head. This neckline would be like way down here, like around those levels. So you would wait for the neckline to be broken and then drop and retest, and then you want to take it down. I like to get in right there. If it's go out, it's a tight stop. If it continue to rise, I'm out. That's the way I trade. It continues to rise, I'm out. But if it's going to keep going down, I can capture a much bigger move. All right, that's the way. Again, that's my style of trading. I trade very aggressively. That's my style of trading. So that's what I do. One thing I wanted to review with you guys. I think I covered Tesla with you guys, and right at the open, I told you guys, and I told you guys that this is what I did with Tesla on that pop. Soon as Tesla popped to 364, I went short. Now, why did I go short on Tesla when the market was rallying this high? I did so because I don't care what anybody says. As of right now, Tesla is a car company. Tesla has potential to be a tech company, a technology company, or a software company. But as of right now, it is a car company. That's the product. All right. People talk about, oh, they have robots coming. How many robots have they sold? They haven't sold any. All right. Oh well, it's a software company. Um, they only sell the software that's attached to the car. Now, this is not about bad mouthing Tesla. This is literally me saying they are getting their butts kicked, and this is the play that I see. First of all, I call the head and shoulders pattern way up here with you guys, and I had this thing drawn. It stayed there for quite some time. I had all these things just drawn up. This is my target on it. My target was 293. I already took profit when it got to here. It popped. I went short again. It went down here. I think on that day, I sold. On that day, it popped again. Soon as it popped again, I went and grabbed me some put positions on that again. So this is why again, again, I need to clarify that was an intraday trade, by the way. This was not a long trade. That was an intraday trade because I'm not trying to really hold things overnight because the market can be irrational with whatever headlines that gets put out right before the market open. All right. So that's what we are looking at, guys. And this is why I trade the way that I trade. Like I took that way up there, hold that, and write this thing down there. Now, again, like I keep saying, this is the safer trade. And when I say to you guys, you might think, hey, you know what? He's just saying that I haven't seen it. Now, if you one of those people that was very patient, you waited. This is the left shoulder, right shoulder. You just had to wait and be patient. This is the neckline right there. What did we do? Let's take a look. What did we do? We broke and then we retest. This was your chance to get in. If you didn't get in when we got here, that's not the time to get in. When it did this, that's your second chance to get in. Right now is not the time to get in. All right. That's the thing. A lot of people like to chase the market. You want to go short when the market has a big red candle or a stock has a big red candle. If you go in short, you want to buy on green days. If you want to go long, you want to mostly buy on red days. That's when you're going to get the best discount. The best discount you're going to get is getting those stocks on days when they are selling off. Just find your levels, find that support level. It gets to that support level. It might go down the support level a little bit, right? If it continues to go down, you can get out, right? But this is how you're going to get your best trades. You have to be brave and understand, hey, I understand everybody's running for the hills and you're running toward the fire. But if you really, really want to really start getting into the point where you are increasing your risk reward ratio, you're going to have to, start getting a bit more aggressive. Again, but then again, you know what? Let me just take that back a little bit. It all depends on your trading style and can you stomach that, because there's a lot of emotion involved when it comes to buying on red days. All right. When you're buying on red days, it is not something that is fun. You have a lot of things going on in your head. What if it doesn't work? What if this? What if that? These are all the kind of things that happens. All right. Now, going away, guys. I wanted to leave you guys with this, right? Remember, for those of you guys, I said if you hold very long-term stuff, don't panic. If you didn't sell already at the top when I was saying you to sell, just hold it. And for those of you guys that I was saying, hey, it's time to start nibbling a little bit. Just get a little bit, not too much. Guess what? You just had a great day. You just had a great day. I know some of you guys that are watching have loaded up. Well, not I'm sorry, not say loaded, but you have already started to buy some long dated spy calls. Now, again, they are not cheap. They're not for everybody, but I know some of you guys were doing that, and you got rewarded. All right, you got rewarded handsomely for that. So what we saw happen today was the market did not reward people who panic. When the market is, if you didn't get the chance, if you didn't get a chance to get out at the top, if you are holding SPY or the Qs, as long as the border market is the indices, you just want to take a step back. If it's already down 10% in your hands, in my opinion, and the way that I trade, if it's already down 10% and I have like 6 months, 7 months, a year on something, again, I'm not talking about a company that's like maybe that's not profitable, a company that's like a meme stock, none of that stuff. I'm talking about profitable companies or the likes of the SPY, the SPY, S&P 500, the Nasdaq, the Russell 2000, the Dow. If you buy those things, all you gotta do is wait, because guess what? More often than I would say about 80%, 80% or more, they will recover. They will recover. You just need time. You just need time. All right. So the VIX really really off where it was from March 9th. So all you had to do is just sit back, man, and just wait. I'm not asking you guys to ignore risk. Do not ignore risk. Make sure you manage your risk. But at the same time, like I'm saying, if you were already in at the S&P 500, that's the way I do it. If I'm already in the S&P 500 and it's already down a lot, I'm just going to hold it for a little bit as long as I have time. Time is going to be your best friend. Anyway, guys, I have to go. For those of you guys that are part of the community, I will see you guys shortly. I'm about to hop on right now on Teams. Again, for those of you guys who are here, I appreciate you guys being here. Just a reminder, just stick with the process. It is POP. Make sure you find your process. If you have to tweak things a little bit, make sure you do so. But at the same time, do not change things every 2 3 days. You have to give things some time to work out. All right, give those things a little time. You cannot just have a trading plan or you have a process. You give it 2 days, it didn't work out, and you move on to the next one. Don't do that, guys. Do not do that. But anyway, guys, I have to go. I appreciate you guys being here. Just a reminder. This is always our last words tomorrow. It's get in, get green, get out. Don't get overly confident. Don't get too cocky. Don't get too greedy. Get in, get green, get out. I appreciate you guys being here. Have a good night, everybody. Best of luck tomorrow. And I will see you guys tomorrow on the live, 9 p.m. Eastern Time. Peace out.